Hi guys. Good morning, not morning. Sorry. Good evening. If you can clearly hear my voice, you can just type on the chat box. Just type 1 to show that you can hear my voice. I'll be waiting for everyone to put 1 there so that we can get started. Mm-hmm. 2 there. Yeah, if you can hear my voice, type 1, 1, 2, 3. Okay, good. With that, guys, I'll be starting today's session. Before I start, I just want to tell everyone who's here that, like I told you guys, for today, we're going to talk more about supply and demand, which is a strategy that I trade. And that is a strategy that when you trade, it actually can favor anyone. If you are somebody who's working, it's a good strategy for you to trade because you can even trade while you are still doing your day-to-day job, all right? Yeah, and the other thing, what I want to tell everyone here is that, guys, I know some of you might already know a lot of things about trading. So what I'm doing here, I'm doing this as a way of making sure that as I'll be continue growing, guys, with you, that at the end of a year or end of next year, every one of you guys will be profitable. If I'm profitable, you too, you have to be profitable. Why? Because we will be trading the same strategy. So after, when you are done with these sessions, we'll be having a session whereby every week we will be analyzing charts together, and then we take all kind of like similar trades together. So which means if I become profitable, you too, you'll be profitable. So that is the purpose of me, guys, doing these sessions, is just so that everyone can be on the same page and we look at the charts the same way. So it will be super beneficial to everyone who is totally new to Forex, and for those who have who already started trading, they're struggling and they don't know if indeed that strategy it can work, or that strategy, whatever they're doing out there, is failing them. Maybe it could be a good time for you to be considering changing your strategy and choose something that you're going to stick for it for a long time to master it. All right. So yeah, today's session, guys, we're just going to talk about the basics of demand and supply. All right. And as all of you guys, you know that whenever you go to any shop and you buy something, you'll always know that if there's shortage of that product, prices becomes higher, or it will be super expensive, right? So if we have more of something, the cheaper it becomes. So in those terms, demand, when the demand is higher for a certain product, it becomes expensive, all right? So, and when there's too much supply for a certain product, it means that the price will be low. So even on Forex market, everything, it works that way, guys. So usually when you look on every chart, you might find that every chart that you see out there, price is either is going up or is going down, right? The reason why that is happening is because of forces of demand and supply. So when the demand is high, as you know, like I told you, it means that the prices will be very expensive, right? So, and the supply and demand is based slowly on that. And few things that you have to note is that when you trade supply and demand, you can't, guys, execute on live price. All right. Trading supply and demand, you can't trade on current price. Okay. So why is that? Okay, let's look here. With demand and supply, guys, you look at the charts and they will tell you where price is, all right? And they will tell you what is currently happening, okay? So with demand and supply strategy, we don't trade current price, okay? So we trade using limit orders. We tried using limit orders, okay? That is how we trade using supply and demand, okay? So, or sometimes you can actually, mostly we call this SND. SND meaning supply and demand. Sometimes you'll find me using this word to say supply and demand, all right? We don't trade current price and we use limit orders, okay? Why? Because we analyze our charts and then after that we put our triggers. When price reaches that area, we expect it to respond the way we're predicting it. So, and demand, supply and demand, it's a strategy, guys, that works only using technical analysis, all right? So it doesn't matter. It's not based on news events, right? Why? Because whenever you see any news or whenever you see any events happening, okay, when the market fall or when the market goes up, it usually follows a certain pattern, all right? So that certain pattern, guys, is what we call technical analysis, all right? It falls the technical analysis or it doesn't fall news, okay? Like example, when you are trading supply and demand, when there is news about something, the news, they actually helps you to trigger your position faster, all right? So, or even to reach at your target profit faster, okay? So that is why I'm saying supply and demand, it uses technical analysis. We only trade based on technical analysis. We don't read thousands of articles out there to try to depict where the market will go, okay? We look at our charts and then based on what our charts are saying, we execute our trades. So in short, looking at the chart, it's an looking at the chart, it have to tell you what you need to do. All right, like examples, some of you are familiar with few concepts like support, resistance, overbought, head and shoulders, all of those. All right, those concepts, guys, they follow a predefined pattern. All right, so with that, guys, in mind, I'm going to start now introducing you to supply and demand. All right, something to take home. We can't buy in current price. We use limit orders. All right, so the other important thing, guys, so is that whenever you look on any chart, you'll always see this. All right, you'll always see this whenever you look on any chart. You'll always find candles like this. All right, every chart you look out there, it has this. So now on supply and demand, we call this area here is called stopper candles, or whenever price goes up or goes down, it will print something we call stopper candles, or they can call them base candles. So a stopper candle or a base candle, it means a price, it can't move from just like this. No, that's not how price moves. Okay, price, it moves up, and when it moves up, somewhere it stops. Like price will move up, and then it will get here, it pauses. After that, it will continue moving up. Okay, if you've been looking at the chart, you will notice this pattern. Okay, why is that so? It is because price need to breathe. Okay, before you continue with the journey, you need to rest. Let's say if you are coming from Francistown to Gaborone, when you reach Palape, you'll take maybe 5 minutes or 20 minutes break. Okay, why? Because that is how everything is created, especially even with price should pause and continue. All right, so keep that, write that down. With supply and demand, wherever price pauses or where price stops, it produces something called stopper candles, or sometimes it's called base candles. All right, so why am I emphasizing this a lot? The main reason is that when you trade supply and demand, this is where we look at 90% of the times. When I open my charts, I look at this kind of candles. Okay, because why is it so? Because when price pauses, most of the time, or about 90% of the time, price will come down to test the stopper candles, or it will reverse, touch the stopper candle, and then it will go up. All right, so how do you find stopper candles on your charts? Stopper candles, most of them, they are accompanied by long candles. There will be a long candle like this one, and then a short one, and then another long one. All right, so what is very important for you to note here is that a stopper candle, let's say this is your stopper candle, okay, and to say that area is valid, the next candles, they should be 2 times the size of the stopper candles. So this area is called a departure, right? After producing a stopper candle, we expect the market to print 2 times the size of this candle to consider the area tradable or valid. All right. If somehow the market produces a candle like this and then another one same size, like going up, that is not a good area. All right. So stopper candle, guys, they are made of something we call base candles. So base candles are those short candles that you will see on your charts. All right. So I'm going to show you example on a chart here what I'm talking about. So this is my Euro USD monthly chart. All right. So when you look at that chart, guys, you can see stopper candles, right? This area here is called a stopper candle. Those small areas, those small candles, they are called base candles. All right. We go here, we have a base candle here, and we look up even here. This is a base candle. Even here, this is a base candle. Even here, we have another base candle here, right? Even here, even this, guys, are base candles. So now, what you have to keep in mind is that on the base, or mostly stopper candles, they can comprise of doji candles. They can comprise of, if you attended the previous session, there are few candles that I shown those who attended. We have doji candles, we have marubazu candles, and all of those. All right, those are part of stopper candles, or those are part of candles we call base candles. So whenever the market goes up, note it prints candles like that. These guys are called pauses, right? It means the market gets here, breathes, goes up, breathes, goes up, breathes, goes up. So this area, it's a monthly chart. It's a monthly area. If you go to a lower time frame, you're going to notice that most of the time after the market prints those candles, the market will go down to test the area. Like example here, stopper candle. After this, I'll teach you guys how to draw the bases and all this. These were stopper candles. Market dropped, went back, touched the area. All right. So that is why when we trade, we say we have something called stopper candles, which usually are pauses on the market. All right. So going back to our thing here, I'm going to show you this again. Market moves like this. This is a long candle, and then market will print a short one, sometimes like this, okay? Sometimes an area like this, okay? Sometimes could be like that. And then from here, the market will go up. All right. So usually you draw them like that. All right. And market will go up. After that, market will drop to test the area, and market will go up. All right. Take that out. We have, when the market moves, it produces something called base candles or stopper candles. So now we enter our trades on supply and demand using base candles, okay, with something called distal lines and proximal lines. All right. So this box that I drawn here, guys, this box that I drawn here, it shows me that I will put my buy order here, right? And then this area here, I will put my stop loss, okay? That is how you manage trades using supply and demand, all right? To show you on a chart, typical example on this one here, I will draw here. Usually I'll do this, and then another one here. On this here, I will do my stop loss, and then up here, I'll do my buy limit, which means price it will touch here, go up, all right, enter my trade, rallies, and then goes down. So usually when it's here, when it goes down, still produces stopper candles. Okay, so those areas, guys, we have an area called distal line and proximal lines, or you can say distal and proximal levels. All right, the other one is next to the current price. The other one is lower than the current price. Okay. So now, that was something that I wanted everyone to be aware of before we start. Okay. So now we're going to talk about types of demand, of supply and demand. All right. So we have two types of supply and demand. Okay. Number one, we have something called valleys and peaks. Number two, we have CPs and continuation patterns. We have CPs, which are continuation patterns, and PCP, which are potential continuation patterns. So this is number one. This is number two. All right. CP stands for continuous pattern, and PCP stands for potential continual pattern. All right. So this is what makes up supply and demand. Valleys and peaks, guys, are the simple ones. All right. While CPs and PCPs are advanced supply levels. Valleys and peaks are the simple supply levels, while CP and PCPs are the advanced ones. Okay. So a valley, how do you draw a valley. So a valley is made up of a bearish leg, is made up of a bearish leg like this. A valley will have something like this. Okay, then stop a candle there, and then like that, right? So a valley, this is a drop leg, and then here a pause and up. All right, so this is what we call the V that gets printed by price when it goes up. Okay, so where price usually tends here, this is the area we call the stopper area or the stopping area, where you'll find stopper candles. All right, so this is a bearish leg, and this one is called a bullish leg, or we can even call it a buying leg. All right, so on a peak, guys, we have something we call drop, base, rally. What does this mean? It means this leg, you drop, the price will drop, base, remember a base is the stopper candle, right? And then after that, it rallies. Rallies means something is going up. All right, this is a valley. Keep that in mind. We call this a valley, right? And we also have something called a peak, right? So valleys are formed when price is going up. Okay, so when price is going down, usually it will print a leg like this, maybe stopper there, and then leg down. All right, so for a peak, it will be price up, pause, then down. All right, so it means here price will be rallying up and then dropping, which means now it's kind of like the opposite of the other. Like, it's, remember, this one is bearish leg, this one is a bullish leg, and now for a peak, this one is a bullish leg, and this one is a bearish leg. All right, this one is printed when price is going down. It's usually like this. There, touches there, goes down. And when price is here, it will print a nice stopper candle. Okay, and we said this is called rally. This bullish leg is called rally, and then this is called base, and then this one is called a drop, which means for a peak, we have something called rally, base, drop. Okay, so now let's look at these areas. These areas, guys, here, they should have a maximum, the basins. Remember, we said these are called the base. They should have a maximum of a max of 6 candles for it to be valid. If it has more than 6 candles there, which are stopper candles or which are called base candles, it means it's not. If it has more than that, more than 6, it means it's not valid. It's not tradable. Okay, you can't bother trading it. Okay, keep that in mind. That is very important. So I'm going to show you this now on a live chart. Okay, let's say example, I will take AUD card. So let me make it that big. Okay, so remember what we said. We said we have, when price goes up, it will print values. I get it. So 1 is another value here. Let me annotate here for you. This is a value. It's a value. It's a value, right? You see, it's a value here. So when price is going down, it prints peaks. So a peak, a peak, a peak, a peak. All right? That is how price moves. Look, it goes up, a valley. When it goes down, it prints peaks. Okay? That is how price moves. So now we are talking about something called a base or stopper candles, which also are called pauses when you're on the market. Look here, this is a pause. This drop base, it's a pause. 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 All those are pauses on the market. So pauses, you'll find them with these small candles, right? All these guys are pauses, okay? So remember we said, example, a valley is like that, a dropping leg, a base, then a rally leg, or the leg that goes up. That is what we have here. Down, a pause, or a base, then up. Same thing, down, a pause, then up. Same thing, down, a pause, then up. All right? What about peaks? You'll see here, down, a pause, down, rally, base, drop. Again, or rally, base, drop. Okay, that is the first type of supply and demand, which is called valleys and peaks. Okay, so now that is how you identify them. All right, so even if you go on these patterns, guys, are printed on every time frame. Even if you can go on a lower time frame, like now I'm on a 15 minutes time frame. I bet I tell you the truth that you'll always find this, because this is market structure. This is how the market moves. Market moves respecting that. Let's check. Same thing. This is a 15 minutes time frame. Same thing. A base, right? Drop, base, drop. Okay. All this. Pauses, 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 pauses. All right. So maybe someone there is telling, somehow saying, why does this matter? It matters because look here, I'll teach you later how to draw levels or the areas that are tradable. Look here, price it's been printing this, I get it. So now, first entry, this area here, when this area is printed, looks now, it consolidated away, meaning it printed the higher, it's longer than, this one is longer than this. It's a touch, it goes down. So these guys are a basing, okay? So usually we'll go like this. Look, price reversed, touch the area. Same thing here. Price will always reverse, touch the area, go down, okay? So even when the price, it breaks the area, like even here, it touched it, reacted, went down a bit, and then went up. So still, there is a way of trading all this. For you, for now, what you need to understand is that this is what you'll see on the price, okay? Price, it goes up, make a V shape, which usually it is a retest, okay? Okay, so what is very important for you is to know that the market takes breaks, okay, to breathe, and then it continues, okay, or it forms a continuation pattern called CP. There is an area now. Remember, we said types of demand, we have valleys and peaks, and we also have continuation patterns, all right? Continuation patterns, guys, they are usually, there will be, you wouldn't find V's on continuation patterns, all right? So with a continuation pattern, and still they are made up of stopper candles, or they're made up of candles we call base candles, all right? So if you look at this euro, if you look at this euro chart, let me just go up here, all right? So that I can show you, actually even on this last one is still fine. Actually the best one is this one. So if you look closely at these candles, this market was falling down. It wasn't printing the V's. These are not V's or inverted V's. These are not peaks. Remember, a peak, we said it will be like this, I get it. And then a valley will be like this, okay? So now this market was not printing this. So for here, a valley was printed here, okay? And then a V was printed here, okay? And price now was putting a base, or we call this CP, continuation patterns. CP. These are pauses also that the market takes. A pause goes up, all right? These are pauses, Okay, let's check more. We have here another pause. These are pauses, or these are called continuation patterns. Usually, like I said, when price prints this, 80% of the time, it goes up. It follows that trend, right? Yeah, these are continuation patterns. Okay, so those are the two main levels or types of demand and supply that we trade at: supply and demand. Okay, we trade valleys and peaks and continuation patterns, because that is how price moves. Okay, so just take this, price moves up, it makes a nice pause, and then it goes up. This area, guys, a pattern like this, whenever you see a pattern like this, know that pattern is called continuation pattern, or it's called a CP. All right? It makes up the structure of the charts. They can be 2, they can be 6. Remember I said the maximum that you can see on a base for you to consider that area a CP or valid, the maximum candles, short candles that you can see there, it should be at least 6 of them. Okay, like here, it's a nice CP. Okay, and then I said, when the market moves, it will have a drop leg, a base, and then a rally leg or a bullish leg. This, I said, it's called what? It's called a valley. And we have also said there's something called a peak. This will be a bullish leg, or the leg that moves up. And then we'll have something nice here. It could be like this. Could be like this. Or it could be like this. Okay. And price will move down. This, guys, here, it's a base. It's a base. These are bases, okay? And this for when price moves up, and this when price moves down. All right? And this, as price will be moving, it will be printing this nice pauses, okay, that are evident on every chart. Okay? All right? I'll teach you later how to trade these patterns. For now, is for you to have an understanding. Okay? All right? So now, something to take home is this. You on the bases, guys, you will find Marubozu candles. on the base, and you'll also find doji candles on the base. Okay, you'll also find candles like Bohama, all right, and also the bases or that are made up of engulfing candles, all right. So these candles, guys, example, an engulfing candle, it means it's a candle that looks like this. Like if price is going up, you will have something like this, and then a candle that would be bigger than this one. Let's say this is a candle that goes up, right? No, usually this candle can go up. It could be a candle that goes up, or it can be a candle that goes down, and then next to it will be a long candle that longer than the previous one. This pattern is called engulfing pattern, or it's an engulf, all right? Meaning, example, on this chart here, an engulfing pattern is here. Let me show you this candle. Okay, let me clear this. Let me increase the size, all right? Okay, this candle or this pattern here, it's an engulf. It's an engulfing pattern, all right? This pattern here, these two candles here, those are the engulfing candles. Okay. Another one, engulf, all right? So you will have bases formed that way, okay? Like example here, if you look at this, it's a rally drop, okay? So this one, it doesn't have a base or that small short candle. It's rally drop. It's made up of an engulfing candle, all right? So whenever you see this pattern, most of the time price will go down, all right? Same thing here. Look, it went up, and then this candle is longer than the previous one. After this, what happened? Price went down. Same thing here. It's long, price went down. Same thing here. It's long, price went up. All right. If you're to trade this is your buy limit. And same thing, if you're to trade this is your buy limit. It will be triggered. All right. So same thing here. It will be your buy limit. Price triggered. Or it's a trade. Okay. So for those for those who might be already trading, if I do, let me do analysis for you. Here we have, okay. So for newbies, don't worry about this. You learn later about this, okay? So for those who already know how to trade supply and demand, or who knows the basics of this, there is it's a monthly time frame, okay? So price turned here the previous month, and which means now price is at the lowest. It's on the monthly down frame, time frame, okay? So the law of demand, the rules of supply and demand is that when price reaches this area, it should turn, okay? So when we are in this area, when we trade supply and demand, we are looking for buying only, not selling, okay? Let's look example on the weekly time frame. We have on the weekly time frame, we do have a nice area here, okay? So which means I'm going to put where prices, this nice area here, and I'm going to look for this area on the lower time frame. So remember, when we trade supply and demand, we trade 3 time frames. Like we look at monthly for direction, where price is, and weekly also for direction, and then daily, that is where we execute our trades or our limit orders, right? So I'm going to go down, drilling down again to, where is my thing? Okay, let's go see that area. It's here. Yeah, it's here. Okay, so let me show you what we've been talking about from the session. From the session, we are talking about these candles, right? And we have a doji candle somewhere here. So, which means we are expecting price, our entry on this area, okay? So, because the lowest low is actually here. So, it's at 1.07254, okay? And this is, we're going to, if we enter this, our limit orders will be here. Let's check. All right. So actually, in short, where we are, we expect price to react. So let's check. H4. Okay, so as it stands, with Euro USD, we are doing nothing. We are only buying. So you can't be, if you trade, if you are a trader, where Euro USD is only for buying opportunities, right? And your stop loss should be somewhere here, 1.00725, right? So if we, as we will be buying here, we expect this price to move maybe to this level here. Our take profits should be somewhere here, or you can say at 1.1066. So the signal for today's session is we are buying Euro USD. So now, for those who are going to take this signal, I advise you this. Make sure that you become patient. And also, you don't, when you are a trader, trading is a business. You don't gamble, all right? So 0.01, if you're a newbie, it's a lot size that is enough, all right? So, and for me as it stands, I'm going to enter my trade and pushing my stop loss down here, okay? So don't worry, for this one, it's a demo account. I'm going to put this so that next week, we're going to see how our trade performed, right? That's the lowest low. Okay. Yeah, your stop loss should be at 1.07254. And remember, while you are there, make sure that you enter with the lowest lot size you can, okay? All right, so with that, that's the end of today's session. And I'll be taking questions based on that.